Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is Forex Quick Look. I'm going to take a look at the Aussie versus US dollar, so sit right there. Recall from last Friday, I wrote about the Aussie versus US dollar, kind of saying that the market might be in for a correction. Not only had the price moved up pretty much without interruption for 11 or so days to the upside, but the RSI, which I often not look at, moved above the 70 level. That was the first time that the market had the RSI had moved above the 70 level going back a number of years. So it was an overbought condition, but as we know, as a trader, overbought conditions can get more overbought. So I'm always cautious about that. But in my analysis on Friday, I also spoke about the hourly chart. And in particular, the price had moved above the top side channel trend line here. This is on Thursday's trade. That increases the bullish bias, and you can see the price tried to stay above that level, but could not sustain that momentum. So on Friday, when the market moved back below the top side trend line, there was a reason to sell from a technical perspective other than the RSI being overbought. Always look for that other reason that's going to give you a level that you can eye as a level to lean against. And in that case, it was the topside channel trend line. So as long as the price remained below that level, the sellers could look for further probing to the downside. Okay, so overbought conditions on the daily chart RSI, but fell below a trend line, which is a risk-defining level that gave us something to lean against. Now, in trading yesterday, the price did move up and down. As you can see, it was a holiday trading, so we saw up and down, but the price did move lower from the close on Friday. In addition to that, it set ourselves up for today's trading because the rising trend line, the lower channel trend line, the rising 100-hour moving average, the blue line in the chart, and perhaps this swing area where we had a swing high going back to day last week and a swing low from yesterday, all kind of converged right in this area right through here. And as you can see, when the price fell below that area in trading here today, this area right here, what do we see? We saw sellers selling intensify. The price moved down to the 200-hour moving average, a little correction here, and then ultimately a move below the 200-hour moving average, which sealed the downside even further with a move down to test the next target area, that being this yellow area between the 0.6750 and 0.67546. So overall, the technicals have worked. Main breaks were this area right here with a number of different technical levels there, also below the 200-hour moving average. And now we're tasting the next key target. What next? Now, we could find support buyers here, in which case we would look for the 200-hour moving average to hold resistance before moving to the downside. If we move back above the 200-hour moving average, all bets are off. So traders who want to buy a dip may be able to lean against this level. Conversely, if you're still more bearish and want to see further downside, this area right through here is the really key support. This is defined by the 38.2% retracement of the move up from this low right here to this high right here. Also, this blue line represents the 100-day moving average. So both of those levels are key levels from a technical perspective. I would expect that buyers would, if we price move down to this level, there would be willing buyers, and also the sellers here would look to buy against that level, take some profit with a stop on the break below. So that's a technical level for technical picture for the Aussie versus US dollar. Watch the 200-hour moving average above for resistance, and watch the 100-day moving average at 38.2% retracement below for support. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.